Hi, this is Randy Finney with the Right Side of the Chart, and this was an early session update for Friday, March 10th, 2023. It is 9:34 p.m. Eastern Time, so only a few minutes after the market open. I usually wait until the market's traded for at least half hour or an hour before doing these videos. There's so much to get out to you. I started to mark up some charts or gold, silver, the euro, and then I'm looking at the banks, I'm looking at the S&P. And on top of all that, I have somebody coming out to the house, a mobile mechanic. Sorry about this. I've had this appointment. It took a month out to get him out here. I've got some issues on the boat since the hurricane, so I couldn't cancel that appointment. They're going to be here soon, and I'll have to be out there with them, showing them some of the issues. And so, therefore, I'm going to be away from my desk here shortly. I'm going to get this video out to you, tell you what to watch. Add to that, I have a doctor's appointment that's also been on the calendar for months now, a couple months. I've got to go to this afternoon, just a routine thing. But down here, you can't cancel, or these guys are booked out, 3, 4, 5 months in advance. It's crazy. Anywho, all right, so I'll be away from the desk a lot of today, but again, I'm going to try to throw out the most important things to watch. Very important time in the market. If I've said the word important enough, hopefully you understand at least what I think is a key level. This is the S&P 500. Here's my clean board. I've talked about this numerous times. I don't want to beat a dead horse too much, but if you're new, just catching up things. This is the primary downtrend line in the bear market. It was broken out. We took it out here along with the key 200-day moving averages. There's a 200 simple. It's capped every advance up until we broke out. So it was a dual breakout of multiple resistance levels. And this whole thing, I've suspected all along, it will prove to be a false breakout. And to me, it's so important because not just, okay, it'll be another whipsaw or false breakout. This is powerful because what happens is the market cheerleaders came out, many of them, permabulls declaring the bear market over. We took out the 200-day moving averages. We're well above those. We took out the primary downtrend line, and we had several back tests. And the fact that we're even back there now, look, it could be just another back test, and I always said it's most important is how you close the day. So yeah, we're a little bit under it now, but if we close below yesterday's lows, and the way it works is, as I like to say, the redder the better for a sell signal, meaning the further down, when you look in the last hour of trading today, 30 minutes to go, whatever it is, and we're down here, that breakdown's probably going to stick. You're almost certainly not going to see a recovery back above there. Anything's possible. Maybe we get a sell signal today with a solid red candle and then pop above it next week. But I've learned to take the charts on face value, and it has been my preferred scenario along that this breakout would ultimately fail. And the fact is that we've already tested several times and we're already back there again. Normally on a breakout, some breakouts go and they never look back and they don't back test. Some breakouts you come in and back test, and normally on a breakout like this, after back testing several days, a week or so there, usually that's it, and that's all you need, and then you're off to the races. The fact that we're already back down to the trend line again, it shows weakness. It shows a lack of follow-through buyers on both the initial breakout and the subsequent back test. So that's it. I favor this, and like I said yesterday, I think the odds went up sharply yesterday that will occur now and into next week. Will occur today. In other words, a red close today, and then could be really, really ugly next week. So anyway, we'll see what happens. And let me just show you a quick trading plan. The way it works is, everyone's different. You may have shorted here, here, here. You may have shorted anywhere in here. You may not be short. Maybe you want to short today. And so the way it works is, if you're worried about, because volatility is high and you could have a sharp move to the downside or upside. That's what happens when volatility spikes up. The green days are greener and the red days are redder, meaning big candles in either direction. There you can see that big, huge green candle there, and that's just how it works. When the VIX goes down low, volatility starts to compress or mitigate. And anyway, so we know that the VIX has been moving up lately, and I'm going to get to that in just one second. So the trading strategy is, I favor this, and I think there's a good chance that this failure, if we get it, will be the catalyst for the next leg down in the bear market. That means trend, swing position. That means probably take out the previous lows as well, and that's going to be a big drop. I'll I'll go over my longer term targets. I've covered them many times. I want to get this video out to you, especially before I get a knock on the door here. So that's that. That's what to look for. I think we're going lower, and not just a little. These are all swing trade, short-term stuff. This is again bigger picture stuff. This is where again, if you're not already, you could position potentially for another double-digit move down in the equity markets. And I'm using the S&P 500 because that's widely considered the stock market. Yeah, NASDAQ 100, yes, is my preferred trading proxy, but it's mostly tech stocks. The S&P 500 is much more indicative of the overall economy and the overall stock market because it's more inclusive of various sectors, more diversified that way. All right, so that's it. The VIX, I'm going to have a delay on this one. I'll give you the live one in a second. But yesterday I wanted to show you this, and we'll analyze this this chart of the VIX real quick. All right, so a couple months back, and on several videos, I highlighted these downtrend lines, and where you get these pullbacks in the VIX followed by these spikes. I said it kind of looks like an EKG. And then I noticed a pattern. I highlighted this in the past, that after the breakout, the VIX doesn't explode. It always, at least it always has since the bear market started. Remember, the NASDAQ 100 peaked back here in November. So these were the legs down. Each spike in the VIX is correlates with one of the legs down in the bear market, right? And so what happened in each and every time, you consolidated for a little while. You had some up, down, and then right after that initial period of consolidation, which looked to go for a couple weeks, you had an explosive, sharp move up and out of there. It was either in one day or several green days. Like here, it was 4 green candles, and that was so if this was the initial spark, this was the subsequent, explosion, if you will. It was a little time delayed fuse, we'll call it. And then boom, VIX exploded. Same thing here, up, and then boom, look, 1, 2, 3 big green candles, and then boom, an explosion. Breakout, consolidation, and then look, one, and then this big massive green candle right there I just drew. It's about as big as the one yesterday. Again, this is a time delayed chart. I'll get to a live one in a second. I have different boards. This program annoys the heck out of me, but it gives you a 15-minute delay on the VIX. And that's it. So there's a pattern. There's your breakout, circled area, big green candle right here. See it right there? Boom, and then shoo. All right, and so this is what finally happened again. We had this period of consolidation, and then yesterday was a big green candle. Hasn't popped the highs, but it's probably going to do that today. And again, that would send the VIX up. Even from the move we had yesterday was already about a 20% gain. And we get up to that trend line, you're talking about 70%. And that's where I think at minimum would go, is that downtrend line again, quite possibly higher. So that's, and if you want to trade it, VXX is a ETF or ETN that tracks the VIX futures, and that should do a pretty good job. They track short-term VIX futures. I'm getting all kind of price alerts today too. I'm getting one on JP Morgan. Remember, I covered the banks yesterday, and that's the big thing too. I know that's why I wanted to do the video. There's just so many moving parts out there right now, so many things to watch. One of them, of course, being the big banks. Let me click on that. JP Morgan hit that 129. That's big support. And again, I said it yesterday, and I'll say it again. This is where the buyers, quote unquote, should step in and buy. If they don't, there's something wrong in Financialville. Okay, that is the biggest bank out there. That is the 800-pound gorilla in the room at support now. I just fired off another alert, or my gosh, I keep getting them today. Bank America also at big support. I mean, that's a huge drop. So this is the kind of stuff, if we just slice right through there, oof, bad news for the stock market. I just got an alert on this one too. LPLA. Most of the big banks are at support. You know what's going on. I talked about it yesterday. It's Silicon Valley Bank. They halted today. They pretty much locked up, insolvent, and so they're gonna probably go bye-bye. KRE is the regional bank ETF, still selling off. And these are the cracks. I mean, I warned of this way back when, you're going to see something break in the financial system, and now we're seeing this. First it was crypto broke, and now you're seeing, cracks here, and it's maybe not the end of the world. Oh, here's where I wanted to go with this too. Is the other thing is gold, silver. Remember I told you the other day I like those. I slightly tweaked. Remember my trend line? We were a hair below it. I had it right here coming off this candle, and what I did is I made a better fit. I had it right here, said we were broke below it, but a hair below it. And then I zeroed in on this chart and got it a little tighter and came in to capture that one right there. And that puts us right there. So we're still at trendline support. Again, I always say the charts are dynamic, and so is my analysis. I have no problem modifying my charts. There's a 60-minute chart of Euro USD. So from a fundamental perspective, okay, so for jobs numbers meant nothing to me this morning. I'm sorry to say it that way, because with the Silicon Valley Bank collapsing, and I didn't hear any talk about this. I even watched CNBC this morning. I don't usually watch it. Nobody talked about this. To me, that was a big tick down in probability of a 50% hike, because is Powell going to throw in a 50 basis point hike like the market was pricing in now because of his tough talk the other day with the banking system not collapsing, but the regionals are. A lot of those are really taken. Even the big banks lost, what was it, 44 billion? I forget the number yesterday in a single day in market cap, the top four banks. So to me, that significantly reduced the odds of a 50 basis point cut, no matter what the job number said, because stability of the financial system and the banking system is it has to be a top priority for the Fed. So there you go. So that's all the more reason for gold and the euro to rally, and it is. And remember, euro goes up. I mean, this is a euro against the dollar. Dollar goes down. I showed you the E7 euro futures above support anyways yesterday. They're still there. Where's that? And I believe I showed it to you yesterday. Let me grab that. E7. Yeah. All right. So you had, these are the June contracts. Trend line right there, primary uptrend line, which we never even touched, came very close, and really good price support, and we're at resistance now. So that first resistance, so if we pop that, we go up there, and then we go up there, and then of course that's more the reason to be long silver and gold. So silver coming off, this is 60-minute chart, divergent low, up 2.5% today, nice day in silver. Gold up 1.4%. Also coming off a divergent low here on the 60-minute chart. So again, that should help the case for a weaker dollar, stronger euro, which ultimately should provide a headwind for or tailwind for gold and silver. XLF, this is the big financial sector ETF, just water falling right now. So that's it. But at big support. In fact, yeah, that's big support. I might have to briefly cover some shorts and play a bounce here. Hold on one sec. Okay, I'm going to hold off for now because we have the S&P again below the trend line I just showed you, and this is pretty good support on S&P 500 futures right there, 60-minute chart. So just watch for a reversal if they come in and gun it. But even then, like I said, to me, I'm morphing, at least with my swing accounts, into swing trading mode. It's going to take a sharp recovery and or a solid daily close back above the trend line, really pretty much above yesterday's highs in the S&P 500, for me to change my views on intermediate term swing trade positions. Active trading, you can in and out, but that's, you can flip with a click of a mouse, be in and out of NQ and RTY in a second, and then right back into it. Okay. All right, moving on to, let's see, I covered the currencies. I covered gold, silver. Sorry, I'm kind of all over the place with everything moving here. Let me cover the charts of the futures if I didn't do that already. There it is, GC. Right there at that 1864 resistance level now, coming off that divergent low. If it can pop that, it should carry on up higher. But that is resistance. With that being said, here's silver. I'm just trying to decide if I want to micro trade that gold position. Okay, which I did. I had a pretty big chunk of gold and silver, so no reason not to lighten up. All right, so back to everything else. Geez, sorry guys, I'm all over the place because it's these are days where active trading. The markets are like in swing trade mode and fast forward. When volatility spikes, the gains are this is when most of the profits come, especially for active trading. So if you can, if you're nimble, micromanage, those positions, and you can do a lot better than what the market does over the next, say, week or so. But be careful. Again, if that's not your cup of tea, just stick with the swing positions, and if anything changes, I'll let you know. Like this SOXX semis. Down another 1.63%. That was a nice entry yesterday. PSP that was one of my top picks. We hit T1 yesterday. I meant to get that out to you after the close. There was so much I was doing. And T2 remains 964 and then 928. This one was covered back here. One of those recent videos highlighted as one of my favorite. This is the private equity portfolio. And this is where I think the next shoe is to drop. Both the pension funds, private equity, those that have been masking their losses are not necessarily marking them to market, and that's kind of what happened with SVP with their bond holdings. Okay, so I've also reversed. That's just short-term stuff. I think we'll get a little bounce here on. You can see SPY at support right now, so I think they'll come in and buy it here real quick. And that's again just a little micro trade with the XLF at support I just mentioned. So I think we'll get a little bounce, and then that'll set the stage to short at higher levels. For an active trade. And so something along these lines. I'll watch these short-term charts. What else I want to give you? GDX should run along with gold and silver if they continue to run. Like I said, with that outlook for the euro and US dollar. There's our divergent low right there, aka positive or bullish divergence in GDX. Yes, in a broad-based sell-off, they may come under pressure and underperform gold if gold goes, whether gold goes up or down. And that means if gold rallies, let's say, and rallies 5% over the next week or so, the miners may not rally 10 or so like they usually do. They may rally 5, they may rally 3, or they could even go down. I've seen that in a hard sell-off. But either way, the chart's constructive. So to me, it warrants holding some exposure in that based on the bullish outlook for gold and silver and the my bearish outlook for the dollar. All right, I'm trying to think what else to cover for you. I got you out Tesla last night, but you had plenty of opportunity this morning again in pre-market. Oh, and in the regular session. So T1 is now officially hit. It's not just after hours. It's regular session. T2 hit. All right, and that was one I think worth covering there because that's really good support. And this is a crowd favorite. It's only going to go down so much. But I do think, and I said last night, probably a lot more. If the markets crater, Tesla's going down. This is a hot money stock, and Tesla's going to go much lower. You look at a weekly chart, how much lower? Well, I've called this all along, and I'll maintain my target. This is our primary uptrend line in Tesla, and Tesla bulls don't want to hear it, but that's still another, and I was calling that trend line from up here. That's still from where we're at now. If that trend line's hit, depending if and when it's hit, that's still another 75% downside in Tesla. And that's just, again, a bear market target. And I don't think these targets are so aggressive. I know they are to a lot of people, but I'm calling the same thing on a lot of the big semis and all that. I'm just calling them back down to their secular bull market trend lines. And that would really, honest to God, if you look at it from a longer term perspective, still be bullish in the long run. This is a secular, if that trend line breaks, especially on some of the big semis and stuff like that, like when you go to, NVIDIA and some of these others that have these, very long-term trend lines. It'd be a massive correction and very profitable to trade if these longer-term targets are hit. But again, in the long run, big picture, that's just a bull trend. It's just a mean reversion right there. You start taking out those trend lines, and forget it. That's guns and butter time. It's Armageddon. Go buy a bunker and some MREs. All right, that's it. I just want to show you where we're at. Like I said, right now, financials, which are a big sector, an important sector, they just hit support. So I think the markets will consolidate around here a little bit, and then ultimately let's see how we close the day. The S&P 500, like I said, is still within spitting distance of that downtrend line there. So I think it goes, but you just can't go all in right now short, especially with a lot of big financials and all that just hitting support. You can certainly add to shorts. It all depends on where you're at. I'm trying to speak to everybody, but some people may have gone into today without any short positions. Some people may have come in very short already. And so all I'm trying to show you is wait till the end of the day, and I think if we're down here, you can see there's some price support as well on the S&P 500 right here. Just my crosshairs, I could see this area of consolidation. That was the highs, and then you had a breakout right there, and then you back tested it. You had a reaction there, a big gap, and you also had it was support here and then resistance. So it's also a level that needs to go, and that's what I meant by incrementally. Take that out, and then you take out the next level, bottom of this trading range, I would say. I'll put a line right there. Let me pull this line down and put it right on the bottom of that trading range. That's the way it works. Okie dokie. All right, let's see what they do here. Let's see how hard they buy it up here. Like I said, I think as the financials hitting support, and the S&P, when you look at like a 60-minute chart, you're at support as well. This is my 60-minute 387.17. Again, I look at these consolidation areas. That was an important level to me, was box in. We had a breakout, successful back test of that consolidation range, second back test, and this is the first test of it since then. So at the very least, some buy programs are going to fire off there. The big question is, can they ramp it solidly back above? This is the primary downtrend line you're just seeing here on the 60-minute chart. And if so, and you want to really keep stops tight or keep losses small, then you can start scaling out pretty aggressively. If you're a swing or a trend trader looking, bigger picture, you might give it a little more room, maybe another run up at that trend line there. Again, it all depends on how much downside you're targeting. All right, let me wrap the video up because I'm going to have to get out here soon. Person's going to be in my house any minute now, and like I said, throughout the day I will give you any updates, anything relevant, anything I've missed, any other trading ops. But if the market buckles and closes down hard today, that's going to again further increase the odds of a sharp potential crash type scenario, or at least a sharp move down next week, unless bulls can foil it. Things that are going to do the best, if that's the case, would be the VIX, VXX. I think the semis will outperform on the downside, and then like I said, flight to safety instruments, gold, silver, treasuries. I gave you that as a long trade idea the other day. That was ZB. I showed you a breakout here, and it was consolidating, and boom, but it's right at resistance now. In fact, this is a good place to book some profits, and especially if we get up there to 130.65, that's even bigger resistance. But we're at the first resistance level now, pretty darn overbought in the near term. So I think there's a fade trade to be made here right now on treasury bonds. So I'm going to stop the video and add a treasury bond short to the index longs that I reversed to. All right, I'm going to wrap it up here, and I will get back to you as soon as I can. This has been Randy Finney with Right Side of the Chart. Have a great